What's going on, everyone? So we're going to take a little look at Draftkings. Draftkings actually has been having a pretty solid week, had a decent week last week. Couple of things that I really want to focus on in the overall stock market right now. So last couple of days in the market, we did have a pretty aggressive bounce coming off of the bottom. I think the market is going to like a little bit more clarity. So what that means is anytime there's any uncertainty in the market, whether that be with inflation, interest rates, the war with Russia and Ukraine, the market tends to back off of the gas. But anytime we sort of get answers, I think the market is already priced in what they were expecting. And, just due to the certainty that we get is going to sway the stocks. I think that's why we had that 2-day rally. But what we really need to take a look at, because I know a lot of you guys are swing trading DraftKings. A lot of you guys are in this position for the long term. You believe in the company, as do I. I think that, over the next 3 to 5 years, this is going to be a phenomenal company with good earnings as soon as they can, kind of pull themselves out of that aggressive cash flow that they're spending on advertising and marketing to acquire customers and sports bettors. So with that being taken into account, we have to be looking at this from a week-to-week basis and a month-to-month basis on the stock and managing our positions accordingly. If you are a long-term investor, I would hope that you would average down on some shares, down anywhere in between the $16 to $18, $19 range. I think you're going to be sitting pretty good there. I don't personally, and again, I'm not a financial advisor, I'm not an analyst, I am just an options day trader, kind of just looking at levels. So with that being said, I don't really see us losing the $16 mark. If we did lose 16, I can see it coming down maybe into 14, 15, but being very, very short-lived, meaning that if we were able to lose these recent lows of $16.56, and it goes a little bit lower, say $14, $15. I don't think that you're going to see the stock necessarily go to $7, $8, $9, something like that. But I think that you could be stuck in another range between around $14 and $20. Right now, the average range that we're in right now on DraftKings is anywhere between $24 to the high side and $20 to the low side. Anytime we seem to break below that $20, we kind of go down to that $17, $18 range. And anytime we kind of come up to the $24 range, we kind of trade back down into that $19, $20 range. So just starting off here at the weekly time frame, you can see big aggressive sell-off, obviously all of 2021, we know that. And then we had this nice little push up followed by another week of just downward selling pressure into these lows here at around $16.56. However, this week we did finish green on the week, however, still underneath this consolidation down here. What's going to really start to excite me on DraftKings, especially going forward, is if we can start to close over $24.75, over that $25 area. And I'm going to show you why here on the daily time frame. If we just get into that daily time frame here, that $24.75, $25, I'm just going to call it for the sake of the video, is going to be taking us out of this consolidation that we have been in since January 21st. So as soon as this level is broken, that would be reclaiming the 50-day moving average on Dkng, which is going to be extremely, extremely bullish for the stock. It's going to cause a lot of short sellers or institutions who have just been holding this stock, as a hedge against the overall market, because it's not necessarily that institutions and banks have been shorting these stocks because they don't believe in the companies, but they've been shorting these positions as a hedge against the overall market, being that obviously there, any time of uncertainty, there's not going to be a lot of money flowing into speculation names, into higher growth names, into companies that necessarily don't have, good, decent earnings this early in the company. So with that being said, if we can get a close over this 50-day moving average, is going to force a lot of those institutions and a lot of those retail shorts who have been kind of hedging their position against the market to kind of start exiting that position, because if they don't, it can put you into a nice gamma squeeze on a stock like DraftKings, where I can see DraftKings going from like $25 into this $30, $31 very, very quickly. That's not something that you're going to want to take part in, especially if you have been shorting down in these areas. You don't not want to be breaking even and or losing money on this position. So as we get into this week, here's a couple of levels that I want to identify that we should really be keeping our eyes on. And that is, if we can confirm Friday's highs, there is going to be room to the top side. So that $22.32, we are going to have room into this 20, let's just call it $24 even. So 22.32 into 24. If you are looking for a short-term trade, as long as we are holding the 20 SMA, which that price, if you want to write it down, is $21.73. If we hold 21.73, I would feel confident holding this position long or call options into this $24 area. If you want to take off your position there, definitely lock in some of those gains and some of those profits, just due to the fact that we have been trading underneath the 50-day moving average on Draftkings. And I'm just going to show you how significant this is. We've been trading underneath the 50-day moving average going all the way back to September. Okay, so anytime we've gotten even remotely close to the 50-day moving average, we've sold off. We have been very, very extended and disconnected from the 50-day moving average for a very, very long time, going back to September. So if we talk about October, November, December, January, February, we're talking about almost 5 months of trading underneath the 50-day moving average. So one thing that you need to be excited about on DraftKings is that if they are able to finally get over the $24, $25 area, this is going to potentially be what the stock needs to get in, to an aggressive run up. And some of those aggressive run ups that we could be looking at here would be $30. It could also be 34, and then obviously take us to that 200-day moving average of around 42. So definitely we need to take it one day at a time, step by step. One consolidation, followed by the next consolidation, followed by the next. So just keep it in mind, anything below this 2160 area, 2175, definitely is in the bottom range between 16 and 25, or 16 and 22, right? It's 21. So with that being said, how do you play this stock accordingly? Well, if we're trading below the 20-day moving average, you definitely want to hedge that position and ride it short. Low of the range being 1650, high of the range being this 2175. So definitely, if we lose the 20-period moving average, we do have a room down. This would be, if you're a long-term investor, time to start averaging down on your position and acquiring more shares. So as we come into the $16.50 range, this is where it's been acting as a level of support between 16 and 17. So definitely want to be acquiring the most shares down in this area. Now, if we do close over the 50-day moving average, I think this is going to start the next leg up on DraftKings. So like I mentioned before, 5 months worth of downward selling action on DraftKings. I think that if we can get over this 50-day moving average, is going to change things for the stock tremendously. But again, we cannot just jump in buying shares or buying calls long in the range of 22 to 24 with expectations that we're going to reclaim. So you do not want to anticipate reclaiming the 50-day moving average, because the last thing that I want anyone to do is be buying shares or buying call options at 23 to get rejected at 24 to be trading down here at $18 the following week. We definitely want to reclaim the 50-day moving average, and then we want to get that second day confirmation of that 50-period moving average reclaim. You will see a pullback somewhere into this 50-day moving average, but you want to see this level hold. The level that we want to turn into support is going to be $24. If we can break $24, turn that into a level of support, I believe that's going to be a fine base to start working back up into $28 and $35 for the price target. For me personally, I have a price target to finish out this year somewhere around $30 to $35 on DraftKings. If we can reclaim the 50-day moving average, that would be tremendous. Not to say that we can't make an attempt run up out here to 42, but just like I said, we need to take it one day at a time, 1 week at a time, 1 month at a time. We can't just be saying, and kind of expecting, hey, if we close over the 50, that we're coming immediately back to the 200. There's a lot of things that need to line up with the overall stock market. So just to make those levels clear one more time, we want to close over $25 long. We're going to get extremely bullish on the stock moving higher. Anything below $21.75 is a short position down here into $16.50. But if you are a long-term investor, this is where you want to be buying and accumulating your shares. You do not want to be accumulating shares between $22 and $25. You want to be accumulating shares between $16 and $21. This is the area you want to be accumulating, and you want to be able to ride and sell profits as we're moving higher. Guys, I hope this video helps you guys. If you do want to trade with me each and every single day live, where I'm kind of throwing out these intraday levels, join my Discord community. That link is down in the description box below. Also, give me a thumbs up on this video and subscribe to my channel, and I'm going to see you guys all in the next trading video.